Welcome to this LabWorks USA explainer. Today, we are tackling a financial tool that is, and I'm not exaggerating here, a genuine game changer for carriers: freight factoring. If you've ever felt that cash flow squeeze, that frustrating wait to get paid for a job you've already put in the miles for, then you are in exactly the right place. So stick around, because we're about to unlock how to turn those outstanding invoices into the immediate cash you need to really fuel your business. So let's just kick things off with a reality that I know keeps so many owner-operators and fleet managers up at night. You've done the hard work, right? You've battled the traffic, you've made the delivery on time, the load is exactly where it needs to be. But then you look at your bank account and, well, it's not reflecting that hard work. You're just stuck in this incredibly stressful limbo, waiting 30, 60, sometimes even a painful 90 days for a shipper or broker to finally pay up. And that delay, it isn't just some inconvenience, it's a massive roadblock that can stop a growing business cold in its tracks. So here's our game plan for making sense of it all. First, we're going to dig deep into the problem, that cash flow crunch. Then, we'll define what freight factoring actually is and show you how it works as the solution. From there, we'll explore how it builds real stability for your business, boosts your day-to-day efficiency, seriously cuts down your financial risk, and ultimately, how it helps you shift from just surviving to building a real long-term strategy for success. Okay, let's dive right into Section 1, the cash flow crunch. And this isn't just some business school term, it's the daily reality for so many people in this industry. It's that constant, nagging pressure of watching your hard-earned invoices go out while the bills, for fuel, for insurance, for those unexpected repairs, they just keep piling up. This is the financial battle that can truly make or break a carrier.
And this slide, this really hits on the core pressure points. On one side, you've got these immediate, non-negotiable expenses. Fuel prices are all over the place, insurance payments are due like clockwork, a blown tire doesn't exactly wait for a convenient time, and most importantly, your drivers need their payroll. Those bills don't wait. But on the other side, your payments are trickling in on someone else's schedule. That gap, the one between money going out and money coming in, is where the real danger is. It's what stops growth, because you have to turn down a fantastic new load simply because you can't afford the fuel to take it. And it creates that constant underlying stress of never really knowing where your finances stand.
So, now that we've really laid out that painful problem, let's talk about the solution. This section is all about freight factoring, a financial lifeline that completely changes the game. It's all about turning your unpaid invoices into immediate, usable cash that you can put to work today. So what is it exactly? Well, it's a surprisingly simple idea. Instead of sending your invoice to a customer and then waiting weeks, maybe even months for them to pay you, you sell that invoice to a specialized company called a factor. They then advance you the majority of that money right away. And when I say right away, we're often talking within the same day. Then, and here's the key part, they take on the job of collecting the full payment from your customer. Just think of it like getting a massive advance on your business's paycheck. It puts you right back in the driver's seat of your own cash flow. As you can see right here, the process is incredibly straightforward. Just 4 simple steps. First, you do what you do best. You haul the freight, you complete the delivery. Second, instead of sending the invoice to the broker and starting that long waiting game, you send it directly to your factoring partner. Third, and this is the absolute game changer, you get paid, usually within 24 hours. And finally, the factoring company professionally handles all the collections. The headache of chasing down that payment is completely off your plate. Simple as that. And this is such a crucial point. Factoring isn't just a quick fix for when you're in a tight spot. It's about building a stable financial foundation for the future of your business. It's about creating a system that allows you to scale your operations sustainably without being at the mercy of other companies' unpredictable payment cycles. This comparison to a traditional bank loan is so important to understand. With a loan, you're stuck with a fixed credit limit, and more importantly, you're adding debt to your balance sheet. Factoring is fundamentally different. First off, your available cash scales with your business. The more you haul, the more funding you can access. There's no fixed ceiling. Second, and this is critical for your financial health, it doesn't add debt to your books. You're simply selling an asset, your invoice. This keeps your business looking strong if you ever need other financing down the road. And finally, approval is often based on your customer's credit, not just your own, which makes it much more accessible for newer or growing companies. It's just a faster, more flexible alternative. And this flexibility is a huge advantage in the freight world today. See, many factoring companies don't try to lock you into these restrictive, long-term contracts. They offer simple month-to-month terms, often without those sneaky hidden fees you might find somewhere else. This means you can use factoring as a strategic tool. Turn it on when you're in a growth spurt and need the cash, and maybe pause it when things are steady. It gives you the power to say yes to new opportunities. A broker calls with a fantastic, high-paying load, but you're low on fuel money? Now you can say yes without even hesitating. Okay, now let's talk about one of the most powerful yet often overlooked benefits of factoring. This is about more than just money. It's about reclaiming your most valuable, non-renewable resource, your time. It's all about getting you out from behind a desk, away from the paperwork, and back to what actually makes you money, keeping those wheels turning. I mean, just think about all the hours you or your team spend on those back office tasks, that endless cycle of chasing down invoices that are 30, 60, 90 days past due, making those awkward, hey, where's my money calls, managing all the collections paperwork. A good factoring partner takes all of that off your plate. They even provide these incredibly valuable services like running free credit checks on potential new customers, which helps you steer clear of brokers with a bad payment history from the get-go. All of this frees you up to focus on what you're actually best at, hauling freight. Seriously, I want you to pause and really think about this for a second. If all those hours you currently spend chasing payments were suddenly just handed back to you, what would you do with them? Would you use that time to find more profitable loads and plan better routes? Would you finally get to that preventative truck maintenance you've been putting off? Or maybe you just spend a little more time at home with your family. We would genuinely love to know. Drop a comment below and tell us what you do with all that extra time. All right, moving into our fifth section, let's talk about how factoring acts like a financial shield. In today's volatile market, protecting your hard-earned revenue is just as important as earning it in the first place, and factoring provides several powerful layers of protection against bad debt and unreliable customers.
Factoring gives you several key tools for managing risk. First, as we've mentioned, are those free credit checks. This is your first line of defense, helping you vet customers and their payment history before you even agree to haul a load for them. Second is bad debt protection, which is a critical safeguard we're going to dive into in just a moment. And third, and don't underestimate this one, the simple act of creating predictable cash flow is a massive risk management tool all by itself. It lets you forecast your expenses and budget for the future with confidence, instead of just reacting to financial surprises.
Now, this point is so critical, it really deserves its own moment. With something called a non-recourse agreement, the factoring company takes on the credit risk of your customer. What that means is, if you've done your job, you've delivered the load correctly, but the broker goes out of business or just refuses to pay, you still get to keep your money. The factoring company absorbs that loss, not you. It's basically an insurance policy for your invoices, giving you an incredible amount of peace of mind. Okay, let's tie this all together now and look at the big picture. We've talked about immediate cash, we've talked about operational efficiency, and we've covered risk reduction. But what does it all add up to? Well, it adds up to a fundamental shift in how you operate, from short-term survival mode to long-term strategic growth. When you remove that constant nagging anxiety about cash flow, everything changes. You're no longer lying awake at night just trying to figure out how to cover payroll next week. Instead, you have the financial stability and the mental breathing room to operate with confidence. You can finally lift your head up from the day-to-day grind and start planning for next month, next quarter, and next year. And this slide right here shows what that strategic growth looks like in the real world. With predictable cash flow, these goals are no longer just dreams on a whiteboard. You can finally upgrade to more fuel-efficient equipment, which directly lowers your operating costs and boosts your profit margins. You can confidently hire new drivers to expand your capacity and take on more business. You can begin that exciting process of expanding your fleet, one truck at a time. It empowers you to be more selective, to chase those higher-paying loads, and to build a stronger, more profitable business for the long haul. So we want to leave you with this one final thought. If cash flow was no longer an obstacle, if you knew with 100% certainty that you would be paid within 24 hours for every single load you hauled, what's the one big move you would finally make? What is the one growth opportunity that predictable cash flow would finally unlock for your business?
Thank you so much for joining us for this deep dive into freight factoring. We really hope it gave you a clear picture of how this tool can be a massive strategic advantage for your business. If you were inspired by what you saw today, please do us a huge favor and like this video and subscribe to our YouTube channel, LabWorks USA. And feel free to share this with anyone you think it could help. Thank you.